Hello and welcome to the Navigating Risks and Opportunities for Mining in Latin America webinar. I'm your host, Paul Harris, America's editor at Mining Journal and organizer of the CGS Copper Gold Symposia in Colombia and Ecuador. Today, I'm joined for this discussion by Alan Pangborn of Chesapeake Gold, Marcio Fonseca of GR Silver Mining, and Mike DeRose of Lavras Gold. We may have time for some questions later on, so please submit them using the Q&A tool on the side. Now, to kick things off, I will ask our panelists to give us a brief introduction of who they are, what they do, and where they operate. Alan, let's start with you, please.
Thanks, Paul. Good to see you again. My name's Alan Pangborn. I'm the president and CEO of Chesapeake Gold. We operate in Durango, Mexico, and we have one of the largest undeveloped gold and silver deposits with over 19 million ounces of gold and 483 million ounces of silver in Durango, Mexico, as I said. Thanks, Paul.
Well, thank you, Alan. Marcio?
Thank you, Paul. My name is Marcio Fonseca. I'm the president, COO, and one of the founders of GR Silver. We operate in Sinaloa, Mexico. We have the Plomosas project, which yesterday we announced a material resource update. We have 150 million ounces of silver equivalent in a project that we have the permits. We have agreements for 20 years for exploitation and exploration, plus infrastructure, and moving more into the engineering stage.
Thank you, Marcio. And finally, Mike, please.
Yeah, thanks, Paul. Hi, my name is Mike DeRose. I'm the president and CEO of Lavras Gold Corporation. We are working in Rio Grande do Sul state in southern Brazil on our LDS project, Lavras do Sul project. We currently have 1 million ounces of 43101 compliant gold resources in 2 of 23 known gold showings on our property. And last year, since going public last year, we have actually announced 3 new gold discoveries, which shows the potential upside on our property. Thanks.
Well, thank you very much, gentlemen. Now, before we really get going in our discussion talking about Latin America, I'd like to get into a little bit more detail about each of your projects. You've all got resources. Marcio, as you said, you announced an updated resource yesterday. Chesapeake Gold, Alan, you announced a resource update in February. And Mike, you're very much focused on exploration this year. So presumably there'll be a resource update at some point in the future. Why don't you start off by then give us a little bit more detail about where you are, what's the current stage of your individual projects. Alan, please.
Thanks, Paul. As I mentioned earlier, and Paul, as you mentioned, about 2 or 3 weeks ago, we put an updated resource out. That was the culmination of about 1.5 years work, where when we first took over management 2 years ago, first thing we did was we drilled 5 additional holes, mainly to get metallurgical test work samples. And surprisingly, they came back 18 to 20% higher grade than the block model suggested they would be. At first we went, well, that's nice, upside for a change. And we went and got some more money and we drilled another 18 holes and they also came back similarly higher grade in the central core of the deposit, which then made us ask the question, why? And so we've really spent quite a while going back and doing check assays, re-assays, you name it, to understand why and what's changed. And we remodeled all of that with the help of Carl Edmonds, who was the chief geo with me at SSR Mining. And he was right 3 times in a row, so I tend to trust him. So we remodeled the deposit and we came up with 16% higher grade gold in the central core. That's significant, and that was the main information in the press release we put out three weeks ago. It's significant because it means each ton of ore is now worth 16% more. And that goes straight to the bottom line without increasing mining costs or operating costs or anything. It's just more gold per ton. So it was a great outcome, and we continue to move forward with the rest of the development of the project now.
Well, thank you, Alan. We'll get forward towards the end of our conversation about future plans for the next 12 months or so. Meanwhile, Marcio, you've just put a resource out this week. Tell us a little bit more about that, please.
For sure. The resource that was published yesterday, it's a result of 1.5 years of drilling. We've been very effective about deploying capital at low cost. Our cost per ounce to discovered and ounces is around 17 cents per ounce that we are adding to our resource numbers. The 150 million ounces silver equivalent is a major milestone because of the three areas, San Marcial, Plomosas mine area, and San Juan, now we have a project that has critical mass to potentially move to more engineering kind of thinking. The company, since the inception, has been more oriented towards a business where we are always looking how to mitigate risks for project development. So we consolidate the assets, we consolidate the concessions, controlling the district was the first step. The second was to acquire projects that we have permits to go into production and have infrastructure. The third was to secure 20-year exploitation agreements with local communities. It's part of the whole how to mitigate risks in Mexico. And the third is to create a very solid and knowledgeable workforce in Mexico to really continue to discover more and more sizable deposits. As an example, the average thickness that we have at San Marcial in the discovery area is 55 meters. That creates sizable ore bodies, which can make us, with 200 grams per ton silver equivalent average grade, achieve economy of scale, means high margins in the future.
Well, thank you, Marcio. And finally, Mike.
Yeah, I mean, Lavras is a relatively new company. We actually went public in April of 2022, so about 11 months ago. And it was a consequence of a spin out from a takeover of our predecessor company, Amarillo Gold. And so our corporate focus in the near term on our Lavras project is clearly to create value through exploration. The Lavras project has been known for a long, long time in southern Brazil. In fact, it was first looked at by the Portuguese in the late 1700s. So the old workings, the old diggings on our property are scattered throughout our property. We've focused really on consolidating our land package. So we have about 22,000 hectares of exploration ground now. We have 23 known gold showings that really have seen very little drilling or modern exploration activity. In fact, we have 1 million ounces of 43-101 compliant gold resources in just 2 of those 23 known gold showings. And that's really just a consequence of us drilling off these deposits and just trying to understand the geological sort of characteristics of these deposits. And we've also, since consolidating the land package, have started to prioritize and drill off our priority targets. And since last year, since going public last year, we've actually announced 3 new gold discoveries, one called Zekasuza, which is in the western portion of our property, another one called Matilje, which is in the southern portion of our property, and then another one called Matilje Extension. So within 12 months to make these 3 discoveries, just by doing good basic geology and drilling, we're starting to understand the potential upside on this property, but it is very, very significant. And so that's our focus in the near term.
Well, thank you, Mike. Now, I think Marcio summed up the purpose of this webinar when he used the phrase mitigating risk. We're here to talk about risk in Latin America, risk obviously on individual projects, but also more broadly to help the audience mitigate their risk as investors when they're looking to invest in a specific company, a specific project, and indeed a specific jurisdiction. Now, we've got a range of companies here. We've got 2 developers and an explorer, 2 companies in Mexico, 1 in Brazil. Let's start there. Brazil and Mexico often get bad press as being difficult jurisdictions within which to operate, yet mining thrives there. What should investors focus on the specific countries, and what is the noise to avoid? Mario, let me start with you this time, please.
Okay. I think in my professional opinion, investors should look at companies where we have management experience that have developed similar operations in those countries, that have fully understand of the legislation. Of course, like you said, we have a lot of noise out there. Every time change a government, a new president, a new party, and there's a lot of noise to say, oh, this is going to be anti-mining, this is going to be against open pit. But for us, we have been working in Latin America for many years. There are cycles, no? And mining is part of the core business in Latin America. In some countries, might not be the largest contributor of the GDP, but still a strong force for employment, for support of communities. And I've seen, particularly Mexico, in the current environment, where we saw recently the potential nationalization of lithium, a lot of noise. Recently, maybe some noise about against open pit. But when you are in the country, you can see that mining is still core business. Mining is still part of the country. And there's nothing really in the legislation against open pit mining. That makes me feel that investors should look at the companies and see how much experience those individuals have in that country, how much exposure to developing projects in those countries do they have to mitigate the risks in a project development timeline. Because you can find a deposit, it can be a great deposit, but you need to see it's economic, it's allowed to get the permit. Do we have a good relationship with the local communities? All these elements are very important.
Thank you, Marcio. I think it's worth highlighting there. You mentioned the nationalization of lithium in Mexico. That in itself came as a response to a previous failed attempt by the president to get much greater control of the energy sector. He was blocked in that process, and as a consequence, he then went ahead and did this. So, it's certainly the case that he cannot do what he wants. There is a lot of checks and balances in Mexico.
That's true. And I think we are in the early stages of this process. There's a lot of things still going on, how this is going to be defined in the framework and the outcome, particularly in the lithium scenario in the Sonora state, how this is going to evolve. I think the audience need to remember that Mexico is, particularly Mexico in this case, it's part of the free trade agreement with North America, right? There's a lot of legal aspects that can protect investors and when they invest in mining companies in Mexico. But it's something to watch in that area particularly, but it doesn't really affect what we have in precious metals, called in case of silver and gold, and base metals, which are completely different scenario, in my opinion.
Thank you, Marcio. Now, Alan, you're also operating in Mexico. What are some of your observations?
I agree with what's just been said. I would just add to that. It's a lot of times it's location. There are good parts and bad parts to various countries. There are places that are easier to permit, they're easier to operate in, that are easier to get good community relations. And often you need to look at the history of the area you're operating in as well. As Mario said, is there successful mining around you? Is the community used to it? Does the community understand what it means? And it's not just Mexico, it's anywhere. Yeah, you see the same things in Peru, in Argentina, in Chile. There are certain parts of the country that are way easier to operate in. The local government's supportive, the provincial government's supportive, and then that helps ensure that the federal government is supportive of what you're doing. So we're in Durango. We're very close to the border with Sinaloa as well. And that area has a significant history in mining. Generally, the province and the governors all understand the impact of mining in their state. It's location. It really is location and the history around that location. If it's got a bad community history, you coming in as a new company, unfortunately, the people in the community don't see it as a new company. It's the same gringos coming in to mine something they don't want to do. And so you have the same problems. Whereas if you go into an area where it's been successful, totally different approach to you.
Thank you, Alan. You're kind of preempting my next question, but we'll get to that in a moment anyway. Now, Mike DeRose, Brazil, what should investors focus on about Brazil and what's the noise to avoid there?
Yeah, well, I just a general comment on Latin America in general. I think, we've seen cycles ebb and flow. And then in this cycle, it seems like Latin America is certainly tending towards a more leftist sort of government. And I think that causes a lot of international investors to pause. They worry about some of the issues that have been discussed here on the panel, such as appropriation of properties, the ability to permit, the ability to not wake up one morning and see that your tax rates have changed, that sort of thing. So I think just as a general comment, I think Latin America is certainly suffering from that a little bit. That having been said, I think mining is a core industry for that region. Be it Chile, be it Brazil, be it Peru, be it other jurisdictions like Mexico. Brazil specifically has just gone through a very large controversial election, I would say, very split sort of decision with Bolsonaro winning. Bolsonaro being more leftist relative to the predecessor president. So I think.
Sorry, you mean Lula winning and Bolsonaro being the predecessor?
Sorry, yeah, Lula winning and Bolsonaro losing, and certainly that creates some headline risk in terms of investor appetite for Brazil. So I think that's noise as far as I'm concerned. When you get right down to it, Brazil is a very, very large population. It's a very large country. It's a very sophisticated economy. Certainly, I would argue, and I've traveled to most regions of Latin America, probably the most sophisticated economy in Latin America. So there's a lot of rules. And certainly when you're trying to move a project from exploration to mine development to production, there's a process. There's a very defined process, and you interact with the various agencies and the A&M in the case of Brazil to kind of get things done. So certainly that's a good thing. I think Alan's comment about regions is very significant in the sense that there are certain jurisdictions, certain states in Brazil where you can certainly get mining done, and other states which are more difficult. That having been said, there is a process, and it starts with the community. You have to get the social license from the community to move your project forward, and then you go to the state level, and then you go to the federal level. So I think things can get done, and certainly in Brazil. The other noise that you hear about Brazil is really related to the Amazon and the jungle and the degradation that mining companies do to the Amazon. It's a very easy target. So I think, again, getting to Alan's point, you got to be very specific about the project. Where is the project located? Which state is it in? What's the community relationships like? What's the infrastructure like? All that sort of thing. And certainly our predecessor company, Amarillo, got a project called Mara Rosa to the development stage, and it's a mine that's being built. So you can get things done, but I guess my advice to investors is do your homework, get very granular in terms of the specific opportunity, and just understand what the risks really are relative to the noise.
Thank you, Mike. I want to stay with you for the next question. Mara Rosa was eventually acquired by, I think it was Hochschild Mining, if I'm not mistaken.
Correct.
I want to follow up and dig a little bit deeper on the regional aspect. For all of you, actually, as you say, it really very much depends on where you are in the specific country. Now, Brazil's a massive country. It's got mining throughout the iron ore and copper deposits in Pará, very well known, Minas Gerais, Bahia. Tell us about the locale where you're working and what the specific risk factors are where you work.
In Lavras or for Mara Rosa?
Lavras, yeah.
For Lavras, yeah. We're in southern Brazil, and so Rio Grande do Sul state. And really, I would say it's a district that's not traditionally known for hard rock metal mining per se. So I think some of the challenges for us are really breaking through that barrier. There are sort of industrial sort of mines like coal mines and so on in the area. So there's certainly a mining industry, but there's an educational process that we need to go through to educate the local communities and the state about, what gold mining is all about, because that's ultimately what our project will be. That having been said, there is a fertilizer company, Aguia Resources, that is kind of breaking ground. They got their installation license to move their project forward. So it's certainly it's moving in the right direction, is what I would say.
Thank you. Alan, you mentioned you're in Durango State. What are the particular issues or things to people to be aware of or conscious of in Durango?
I think the stability and the long-term mining that's been happening in Durango for quite a long time, and not just Durango, up and down the Sierra Madre, there's been a history of mining forever. The local communities generally understand it, and you can get it long-term agreements, as Mario mentioned for his project. We're starting to work very closely. We've had exploration agreements with our ejido for decades as well. We're starting to work on that.
Maybe explain what a ejido is. Yeah.
Sorry, an ejido is basically the local community that owns the surface rights of the land. Yeah, it's the original farmers and agricultural people that live in those little villages around a lot of these places and up in the mountains. And so, the history in Durango has always been supportive, almost regardless of the federal government. Yeah, you talk to the current governor and the current Secretary of Economic Development. They just want to know, when are we going to get going? So, Durango's been stable. Previous project I worked on with SSR was Piteria, which has now been sold to Endeavour, and they're moving ahead with that. There's this history of it just keeps repeating with another company, another project, and another project. And so that gives you a sense of security, I guess, in the area that it can be done. It has been done, and you can point at examples of it. Mario mentioned open pits. Down in Sinaloa, all have got permitted. That's an open pit and a heap leach, same as we're planning to do. So it can be done. Yeah.
Thank you, Alan. Now, Marcio, you're in Sonora. Sonora is obviously very famous for copper production. What are the specific local conditions like there for mining and development?
Just a small correction. We are in Sinaloa, but Sonora, for sure, Sonora is a great copper state. Overall, I agree with all my fellow colleagues here presenting that region by region, you need to analyze and see, is the region mining friendly, communities are mining friendly, what's the history there. But one thing that's very important is that I think we all could agree that sometimes it takes time to develop a mining project. Things will never happen overnight, right? Can be 12 months, 24 months. And although the rules are well established in most of Latin American countries, can be in Brazil with all the environmental legislation, in Mexico, there's one factor that we all probably came across in the past: bureaucracy. Takes time to get the paper through the different levels. And that probably is not going to change. You just need to learn how to go through the channels and accommodate that cost, the time that it's going to take to get things done into your project development. Can be exploration scenario. Compared with other jurisdictions, you can get things done quicker, but it's becoming a general trend all over the world. But it's something that I came across a lot in Mexico, as a Brazilian in Brazil, many projects. Things are taking more time to get the paperwork done, but you can still get the paperwork done, in my opinion.
Okay, thank you. We've kind of touched on this, but to what extent do regional or national politics impact mining or target mining? Let's start with you, Marcio.
It impacts a lot. I can give examples in states like in Brazil, Minas Gerais is a mining state. You have a pro-mining governor. Pará is a mining state. Largest iron ore projects in Brazil. In Mexico, like my colleague Alan, in Durango is a mining state. So you have a group of people in those states that can help you to get the message across, get the message to the environmental agencies, work with you as a partner to achieve the goal to get the permits or amend the permits. At federal level is a different story, because that's where the big legislation sometimes is in place. The constitutions, changes in constitutions might affect us, but the mix of what is really the political scenario in the country, who is running, and what's the split at the Congress or Senate helps a lot. And having well-established mining chambers or group of pro-mining people working with the mining companies to get the work done is another part. Just to summarize, I think there's really difference between state level and federal level, and we need to work through at different levels with our needs and how to build up relationships.
Thank you. Alan, anything to add to that from Mexico?
Yeah, I think part of it, you have to think through your community strategy and how you're going to get through all these various levels of permitting, whether it's are they a signatory of ILO 169, and what does that mean, and how do you work with the government to get prior informed consent? There's all sorts of things, but at the end of the day, you have to be able to present a united front as you move further and further up the political system. So get the ejido on board. If the locals don't want it, it ain't going to happen. And they've got long memories. Yeah. And so you've got to have the ejido on board. With the ejido, you get the provincial government on board. And then the president of the ejido, yourself, and the governor go to Mexico City or go to Santiago or go to wherever it is you've got to go and see the federal equivalent. And when you do it like that, it's not just you. And you're also not asking the federal government to mandate what the local governor and the local community have to do, which just builds resentment. And so you've got to turn it around and go the other way. Many, many times you'll see a foreign company go straight to the Minister of Mines and expect him to solve all your problems for you. It isn't going to happen. Yeah, because even if you force them to do it, the resentment will come back at a later time and you won't like it.
And where I'm based in Colombia, we've got a very clear example of that with the La Colosa project, which was basically stopped for the reasons you've just mentioned, Alan. Mike, Brazil, to what extent does national and local politics impact mining?
I would agree 100% with what's just been said on the panel here. And, our strategy has been very much to focus locally and grow from there. So we're a Canadian company operating a Brazilian exploration program, which ultimately we hope to develop into a mine. So what we've done is our country manager, who's Brazilian, is a mining engineer, Paulo Serpa with an MBA. He's actually moved to the town of Lavras, and we've set up our office in Lavras. We employ locally. All of our geologists, all of our field crew are from the local town and surrounding areas. And this is very, very important because it creates the social license within the community to move forward with the project. In fact, I was in Brazil last week and I met with the mayor of Lavras, and he came to our office and he was complimenting our company on just how many jobs we've created locally and how it's making a big impact on the local community. And, our country manager being embedded in the community, he's part of the community. And so when there's trade shows with the local agricultural fair, for example, or the cattle association, we're part of that. And we help sponsor and promote local charities and soccer teams and things of this nature. In fact, one of the things we've done, which is a bit innovative, is we have a program, we call it the Gold Trail, because there's actually a history of mining in Lavras do Sol. And basically what that is it's that people from the community can come to our office in Lavras, they get a passport, and we've identified 5 different locations of historical significance in the town that's related to the history of gold mining in Lavras do Sol. So once each person can go to each of these stations, they get their passport stamped, and then the final station is at our office in Lavras, where a geologist will come out and explain, bring some drill core, explain exactly what we're doing, how we're exploring, what we're finding. So this is our way of creating a very interactive sort of program to start educating the community on what gold mining is all about. Certainly the mayor at his level is very excited about what we're doing. They know about the Mara Rosa project in Goiás, a $200 million investment. It's a mine that's being built. And people in the community ask us, when are you building a mine here? So I think, this is how you start. You have to get community engagement. You have to educate, and it has to be part of their culture. It's when we talk about stakeholders, it's not just about shareholders and people sitting in North America. It's about the local community. It's about the state. It's about the country and the value that you're creating for them. And it's very important to get that message across to people. And this is our strategy down at Lavras.
Thank you, Mike. Now, a key aspect here, and one that all investors want to know and all companies want to know, initiatives potentially to increase government take. We're coming out of an inflationary environment, cost of living crisis in many countries. There's a lot of pressure on governments to seek greater rents from mining and other sectors, to be fair. We've seen this recently with Cobre Panama in Panama, and in Chile, royalty bills progressing through Congress, which could substantially increase the government take there. What's the, Mike DeRose, what's the situation like in Brazil?
Well, we're still at the exploration stage, so we haven't really seen a whole lot of that, to be truthful, at this stage. I won't be surprised if you start to see some sort of, fiscal changes in mining takes. Maybe royalties start to increase, maybe corporate taxation start to increase. That tends to happen, as you know, when you get into more socialist type governments. But I can say, based on what we're doing in terms of the exploration stage, we haven't really seen huge tax impacts at this point.
Okay, so Brazil, there's not a great deal of threat on that regard at the moment. Alan, what's the situation like in Mexico?
we shouldn't just focus on one country. I mean, there's a trend across the world, not just Latin America, but all the way through North America as well, where, as you pointed the question, the governments are looking to increase their take. And it's not just mining. It's personal tax, it's corporate tax, it's transfer of wealth taxes, you name it. If you do it, they're looking for a way to tax it. It doesn't matter what it is you do. You drink, you smoke, doesn't matter. And it all comes back to the same thing. Inflation, the COVID pandemic has had a massive impact on government spend, government debt, increasing interest rates. They've got to be able to fund it. So whether it's the mining industry specifically or it's something else, it comes back to your local presence and strength, the industry strength in the country. When you've got good, strong mining chambers or mining groups that can lobby the government, you can often minimize the impact. Will it go away? It never goes away. Taxes never go down. Yeah.
Okay, well, let me rephrase the question then. You're advancing Metates towards eventual production. So to what extent are you concerned or not that there may be some horizons, tax changes or royalty changes on the horizon which will impact your economics?
There's always rhetoric. We're members of the Canadian-Mexican Mining Chamber. We work with them to work towards trying to minimize those impacts on the mining industry in Mexico, and particularly the Canadian companies that are operating in Mexico. As somebody mentioned, we are part of a free trade bloc between Canada and Mexico, which has legal ramifications if they do start being specific and selective around where they tax. When it's more general, the countries can get away with it. But when they specifically target specific companies, specific investors, specific parts of the industry, it tends to be much more difficult. So we work with all of those associations and the local representatives and the provincial governments to try and influence where it's all going. There's always rhetoric around whether it's nationalization, whether it's no open pit mining, whether it's increasing the royalty, increasing the taxes. That rhetoric is always there. They still have to get it through Congress. You can still help influence where that goes. And that's what we do.
Thank you, Alan. I think a good example of that is what is happening in Chile at the moment. The government initially came out with a very aggressive plan to try and increase royalties and taxes, and through ongoing lobbying, negotiation, whatever form that dialogue took, the mining bodies there have managed to sort of pare that back. There's still going to be increases, but they're not as dramatic as was originally proposed. Marcio, what's your view on this in Mexico?
I pretty much agree with what Alan said, but we have seen a bit of noise in this matter with the recent news about disputes between Canadian mining companies and the Mexican government in relation to not fully paid taxes in some sort of financial agreements. But the taxation system is clear, the royalty system is clear. I think it's pretty much guaranteed at the constitutional level. I haven't seen in Mexico particularly a trend to increase taxes in mining. But one thing that I particularly have seen the last 10 years working in Mexico is that the cost to run business has increased dramatically. We used to have a lot of advantages, a much cheaper way to run the business there. So that's part of the inflation and alignment of the costs in other countries. So we just need to think about, if you're going to find a mineral deposit, if you want to build a mine, we need to always be looking for margins to make sure that that is going to cope with all the legal aspects, pay the taxes. But having said that, in Mexico particularly, we have been very successful to be reimbursed with taxes that we paid, what they call IVA in Mexico. We applied and we've been receiving back. So there's bureaucracy, but the system works. And as long as you are in compliance, paying the taxes, and you get everything done, it's doable. Just need to build that up inside the system, inside your project, to make it really look that's profitable, paying those taxes and royalties.
Thank you, Marcio. Now, I'd like to dig a little bit deeper at the actual project level now. Some of the key flashpoints, particularly with communities and local government, can be issues related to water and potential impacts on agriculture. Both Mexico and Brazil have a lot of agriculture is an important industry, so I imagine this could be a potential flashpoint for each of your projects. Water is certainly becoming more and more of a critical issue for communities throughout Latin America. Let me start with you, Marcio Fonseca. What's happening in terms of the water and agricultural space, and how are you looking to mitigate any potential issues there?
The way we have been mitigating this goes back to what Alan was saying earlier, the relationship with the communities, how from day one to set up a solid relationship. In our particular case, we are in a mining district. It's not a farming area. So that helps us in a way to get the whole concept and the development of the project well established. So you don't need to educate people what's mining. But when you have situations that you have farming nearby, of course, there's a competition for water, and it's becoming more and more scarce, more difficult to get water permits. So having situations where you can have different sources of water, and not really damage the access to those sources to the local communities is a plus. But for sure, it's an issue for brand new projects, grassroots type, where you need to go and really start from zero. You need to be really careful about how you're going to source your water, how you're going to get the community on board to make sure that they fully understand that the water usage that's planned for the mine is not really a big part of the whole availability of the water that's in the region, and how these days in a modern mining scenario, you can recycle water. No, you can really have a lot of aspects on that.
Thank you. Alan Pangborn, what's your view on the water agriculture sort of issue, and how are you looking to mitigate that? And specifically, tell us a little bit about water rights and how they're structured in Mexico.
So I'm glad you added that last piece. Mexico, some years ago, probably did one of the most responsible things I've seen when it comes to managing water. They put a moratorium in place. Probably lasted a bit longer than it should have, but they worked through all of the extraction rights, legal, and all of the other wells that weren't legal, and started to sort it all out. So they basically stopped all new water permits until they understood the basin hydrology, how much water was sustainably extractable for all uses. This wasn't just aimed at mining. And our project actually sits at the top of one of those basins. And so today, when we go and look for water permits, and it's one of the things we're working on at the moment, we know, and the Mexican government understands, how much water is or is not available in that basin. And so they know how much they can permit on a sustainable basis. So that's one thing. So Mexico's done a great job at understanding what water is available in these various basins. And that has then impacted what they can permit and what they won't permit. So that's great. The second thing that we're doing specifically is we've reinvented our entire project. The previous project was a very large mine, autoclave, uses a ton of water. We've reinvented that project into a heap leach scenario, and today we're looking at using 90% less water than the previous project. That makes the conversation with the local ejido and with the permitting authorities for that basin way easier, because we're not looking for millions upon millions upon millions of cubic meters of water a year. Yeah, we're looking for a tenth of that. So those are the two things that I've seen in Mexico that make water, there's a process. And if it's available, you can get it. If you need huge amounts of water, you won't get it. The alternative is you have to go for desal, which has its own set of issues.
Okay, thank you, Alan. Mike DeRose, what's the situation like around your project in Brazil?
Yeah, so Lavras do Sol is an area of agriculture and cattle farming, and so certainly, trying to build a mine in that area will have its challenges with respect to land use. But what we've started to do is as a kind of a terms of reference study, basically very conceptual study, trying to understand exactly what would a mining operation look like here, and what are the issues we need to address. So it's all the usual steps, doing sort of an environmental baseline study, understanding the hydrology of the region, and so on and so forth. And conceptually, what will probably happen at Lavras is that you will have a sort of a centralized mill somewhere. We've got a location selected, which is far enough away from the town and the community that it really doesn't disrupt the local community. And you'll be basically feeding that mill from various sources, various pits, or various sources of ore eventually. And so, we take very much an approach where we need to understand exactly where are we going to be mining, what are the routes to get the ore to the mill, and who will we be impacting. But part of what we've done, again, is you have to start to educate the local community about what mining is really all about and what will be the impacts. And so part of that process is engaging with the agricultural leadership and, just making sure that everybody understands what's going on and how mining works. So it's an educational process, and it's not something that happens overnight. It's something that happens over years. And so we're starting again from the inside out, start with at the local level, get the engagement, get the conversations going so there's no surprises down the road. That's our strategy.
Thank you, Mike. Now, mining legislation and regulations continually evolve. Is there anything on the agenda where you guys are operating that we should be aware of? Mike DeRose, let's start with you.
Truthfully, there's nothing new or that I can think of in terms of something that's different or evolving. I think for us, it's again, we're going to be probably the first real metal mine in the state, and so for us, it's really we see this as an opportunity, quite frankly, to really educate the regulators, the various people that we meet with, to help define the code and use examples from other jurisdictions in Brazil. Where they've been successfully mining. And so, but there's nothing new or different or untoward that I can think of, truthfully, at this stage.
Okay, thank you, Mike. Alan Pamborn.
Look, there's always something that the governments are thinking about doing. And so it's just going back to those mining chambers and trying to influence where they go with it. You mentioned the example of Chile with the royalties. I'll mention the example of Chile with the Constitution. Yeah, he wanted to change everything overnight, and at the end of the day, it got rejected. So, the ability to influence the government and help them understand why what they're proposing probably isn't a great idea. You've seen some of the governors try to do that in Mexico, as he's talked about. As somebody else said, there isn't actually a ban on open pit mining, but there's rhetoric around it. So how do we stop that happening? So I think it's just keep an eye on what's happening, marshal the people and support that you have, and focus on ensuring that it doesn't go in a direction you don't want it to go. I don't think there's anything specific in Mexico today, but give them time. I'm sure they'll come up with something.
Well, thank you, Alan. Marcio, finally.
I agree with Alan that the legislation is well established and is well respected and is well defined by constitutional rights in some situations. And most of the attempts that we saw in the last couple of years to change, particularly in Mexico, they were not successful because all the groups that Alan has mentioned, can be a state government, can be the mining chamber, can be the local authorities, and all the mine executives have been very proactive to make sure that the mining business is well preserved. But having said that, there's an environment always around us looking for some changes or for social agenda, which in some way can be necessary. But the constitutional rights are there, and I don't see that there's anything new in Mexico that would be a major reason to concern, particularly in the precious metals and base metals mining scenario.
Okay, thank you, Marcio. Now, as we're drawing towards a close of this webinar, I'd like to ask you, well, what's the critical path element to your project, and what's some of the key milestones we can expect to see over the next 12 months? And let me start with you, Marcio Fonseca.
Yeah, the critical path now that we put this large resource, that 150 million ounce silver equivalent, into the public is how to start thinking about the engineering, combining all the assets, taking into account that we have areas with the permit. It's not only the permit to mine, that water permit and some basic infrastructure and the agreement with the HIDUS, how to bring that more now to a real number, a potential PEA, something that we are discussing, how to create that economic value in that asset. There are more engineering and maybe an updated resource in the next 6 to 9 months to continue to increase the size, the critical mass of the project.
Thank you, Marcio. Sounds like you're going to be very busy. Alan Pangborn, same question, please.
Since we put the resource update out, that will become another building block towards a PFS that we hope to get started late this year, early next year. The key one that we're waiting on is getting beyond the proof of concept. We put out a proof of concept for our heap leach technology that we're employing, and we're now working on tweaking that to get to the same recoveries we put in the PEA. We've already started in the background a whole bunch of other building blocks or pieces of information that you need to do a PFS. I'm not planning to start that PFS until I have all that information, because otherwise the engineering company just spins its wheels and spends my money. So you know, we've restarted environmental monitoring. We'll have 2 years worth of data by the end of the year, current, which will tie into previous monitoring, which will support the PFS and then the permit application. We're working on water rights. Power, we know where the nearest power line is. We've got all the data for it. It's within 1 kilometer of site. The easement is already approved, which is probably the most important thing. So you have a right of way to get to the power from the site. All of those bits going together and then into the PFS. So that's really the main thing. The PFS will then be the basis of the permit application. At the same time, work with the ejido to convert from an exploration agreement to an exploitation agreement. And we're having regular meetings with them to move that forward.
Thank you, Alan. And finally, Mike DeRose.
Yeah, for us, there's really two key critical items. We're really much focused on de-risking the geological baseline. So we're going to be doing, continue with a lot of exploration. We have 2 drills on site, middle of a 16,000 meter program. And we need to understand the geological baseline before we start getting into more detailed engineering, even conceptual engineering. That having been said, you know, we are starting on the permitting side as well. So we're starting to do some baseline environmental work with the goal of, you know, transferring some of our exploration concessions into mining concessions. So, but really, I would say our focus for this year will be drilling and drilling results, and then ultimately just building up from our 1 million ounce gold inventory. So we're quite excited.
Thank you, Mike. Now, I think we've got time for one more question. So I'm going to abandon the region and go a bit bigger. Volatile times for precious metals. You're all pre-production companies. So how does this impact the capital markets and your ability to raise finance? And let me start with you, Mike DeRose, please.
Wow, we're the high risk, high return end of the market. You know, we're the exploration phase, and so clearly it's probably the most difficult component of the gold space to raise money. I used to be a gold mining analyst for many years, covered all the big companies, the little companies, and the explorers, and I can tell you, the way it works, it's kind of like a slinky. And as far as I'm concerned, the gold market's actually been in a bear market since about 2011, and we're starting to come out of it. I think the macro environment is set up where I think you're going to see a serious rotation of capital back into hard assets, including gold. And we're seeing that with, you know, a lot of things that we're seeing out there in terms of bank failures and so on and so forth. But the way it works is when generalist money starts to rotate back into the sector, it's the big companies that move first. So it's going to be the Barracks, the Newmonts, the Agnico Eagles that start to get investor interest first. Then it migrates down into the sort of the intermediate and junior producing companies, sort of moderate risk, moderate return type companies. And then it will come down into us, the lowly sort of explorers, the drill bit stories, when the speculative money starts to really work its way through the system. So that's how I see it right now.
Thank you, Mike. Alan Pangborn, your comments, please.
I think the most recent volatility has actually caused people to come back and have a look. Yeah, and in recent conferences, we've had quite a few inbounds where people are looking for large ounces. They want to talk to the metal price that previously we'd had no contact with. So I think the volatility and some of the things that are happening in other sectors of the market, as Mike said, has caused people to go, well, where do I go? Yeah, so you've seen, we're starting to see people at least having a look, having a chat. How much have you got? Hang on a minute. What are you priced at? And so you're starting to see interest come back. And with that interest, as Mike said, the big boys first, and then they work their way down. We've seen interest from some of the big boys looking at where do I get my next 10 million ounces from? Yeah, so it's starting to turn, which is great. That'll obviously help with financing when and if we need it.
Well, thank you, Alan. And as and when you get to that stage, you're going to need quite a bit of money. So
Yes.
Higher metal prices are a good thing. Marcio Fonseca, what about you? You're a slightly more modest scale than Alan's Chesapeake. How do you see things?
What I've seen recently is that, like my colleagues said here, is like I've seen more a trend of people trying to go back to the gold and silver with the uncertainty that we are seeing, particularly the latest financial crisis, banking crisis. The gold price is in some way reacting a little bit positive, but for sure we are not back to the mid 2000s when you have a lot of people interested in the junior exploration market. We are in a different cycle. Early days to say, but I think the next 6 months to 9 months is going to tell us how much appetite we have in the capital markets for the developers and junior explorers to attract additional capital. As my colleague said, first, the big companies, they're going to get a big piece of the money. But there'll be still people looking, where can I get my capital deployed in a sizable precious metals, base metals project with good returns, because the economy need that kind of commodity. And I'm positive on the forward thinking in this relation to this market. Yep.
Well, thank you very much. Unfortunately, that's all we have time for. So I'd like to thank Alan Pangborn of Chesapeake Gold, Marcio Fonseca from GR Silver Mining, and Mike DeRose from Lavras Gold, and me, your host, Paul Harris. Thank you for joining us today.